Hello. Thank you all for joining us here this afternoon to talk about the big topic of investment in education. I'm privileged to be joined by 4 very experienced investors across North America. And we plan to cover 3 topics today. We're going to start by taking a look back and kind of having a reflection on what's happened over the last couple of years and what has been a whirlwind of a time in the education space. Then we're going to look at what's happening now, discuss topics such as AI, consolidation, the role of the investor as a partner and not just a funder. And then we're going to kind of finish to share a few thoughts on what gets us excited going forward. So they're the 3 topics. And I'd like to start by looking back. So over the last couple of years, we've seen significant change in the M&A landscape. Early COVID saw doubling in the amount of doubling the volume of funds and deals going into education. And we saw kind of quite an interesting decline or plateau post-2022. So I'm going to ask you, first of all, Veronica, reflecting on the journey we've been through, how would you describe the kind of last 5 years in EdTech and education investing?
Sure, thank you, Wayne. If I could sum it up in one word, I would say turbulent. Probably does it pretty well. You know, I think a lot of folks have experienced this themselves personally, but the pandemic really hit the education industry incredibly hard in the beginning, and we all had to adapt, whether we're schools or education providers or EdTech players or investors. So I think it's been incredibly impactful. When schools were shut down, we saw an acceleration and pull forward, I think some would say, of EdTech services within the space. A lot of things, I think, mirrored some, sector-wide trends outside of education as well, such as remote work. You saw the rise of companies like Zoom, like Peloton, and I think in education you saw that as well, where really the pandemic had shifted a lot of the way people live their lives, work, learn, teach. So I think that was an incredibly impactful time. Then, I mean, very few people expected in 2020, but the run-up in growth technology stocks and the public markets, fueled by what we didn't know at the time was the last of the zero interest rate period, I think really fueled a lot of education technology investment as well. I think that was very much buoyed up by some of those broader technology sector trends. And, inflation hit, then the Fed cracked down, and 2022 was incredibly difficult for the investment space, but also for a lot of startups trying to fundraise, a lot of companies in the growth tech sector. And I think a lot of folks were maybe caught off guard or surprised by the level of reversion to the mean of a lot of the education sector. Obviously schools were open. A lot of schools began to kind of function very much the way they did prior to the pandemic. You just saw sort of these habits kind of coming back. Again, very similar to consumer sectors, healthcare sectors, tech sectors, where you saw the coming back of brick and mortar retail, the coming back of kind of working in person. So a lot of these trends, I think, were very much also prevalent across education. And I think the last year or two, it has still been a turbulent time, and I would say a lot of investors are still quite cautious about what will happen. Certainly the recent March interest rates, that 3.5%, did not help a lot of that, and we're in a position of questioning whether or not the Fed will actually indeed drop rates this year 3 times as many had previously predicted. And I think that really impacts a lot of the capital markets, education as well. So there's a lot of things going on there. And one last thing I will mention is I think that there has been a growing impact of regulatory and political issues within education as a sector, which in my mind is a little bit unprecedented. the FAFSA rollout, last year will hit universities' budgets incredibly hard this year. I think there's a lot of stress and concern about where university budgets and spend will be in a year or two's time. The regulation and bills that have come out on the online program management, the OPM market, has really hit that market shockingly hard as well. And we're seeing a general politicization of the public school sector that is impacting the way people think about content, services, products, how do you serve teachers and students. And some parents you see voting with their feet, moving into private schools because of that. And others are doing other things similar. So I think that that's another trend to really pay attention to as watch as we're going into an election year. I think that next year the regulatory environment will probably look very different, may look very different than today, depending on the result of the presidential elections. And that is just something that we have to now pay attention to and really stay focused on.
Thank you. And to extend the question to the panel, before we start looking forward, like any other reflections on the last 2 years, Richard, Adnan, Alice, that you want to add for the room?
Sure. Well, to start off with, let me just thank everyone for coming here today. I understand you're all shut out of the AI sessions, and that's why you're here. I'd like to zoom out a little bit and talk about, not just the last few years, but the entirety of the history of the conference here, maybe 15 years. We've always had this tension in education investing and value creation from education between innovation and scaling. And sometimes what really attracted capital was innovation. And sometimes what really attracted capital was the ability to scale effectively. I think what we've found, if you look at recent years, is actually a little bit perhaps counterintuitive in that the real value that's been created in the business has been from scaling, not from innovation. Part of that, if you look at the larger companies in the landscape, those have accreted value pretty well, sometimes through inorganic, that is, acquisition of other companies and creating synergies, sometimes through just executing well, and those companies, I think, have been the most successful in the landscape. We've had a lot of innovation, and we've seen at this conference a lot of innovation, as is typical, has shown the light that larger companies have taken advantage of. So I think when, some of us are entrepreneurs in this room, some of us are scaled companies in this room, but when you look at it, innovation doesn't work without scaling. And so you really need to figure out how to do that if you're an entrepreneur. You could have a terrific product and a great idea. It needs to scale to be a value driver for companies, and investors like us. Scaled companies need to innovate. But what's interesting about this market is that whether it's regulatory or institutional, just momentum, et cetera, or some of the restrictions associated with education markets, scale's pretty sticky in this market. And so when you have it, you can have it for a long time, and eventually you maybe get innovated out, and we'll talk about what AI can do to that. But I think that's really the story of the last decade or so in educational investing. Thank you.
And maybe building on that then, Adnan, I'll ask you, when you hear about the dynamics between scale and innovation, and you look forward, do you see other factors come into play? Like, how do you think that will change as you look forward, especially to the rest of this year in 2025?
Well, first of all, I'll echo my colleagues' comments. Thank you all for being here, and thanks for having me. I really like the framework. It's always been an area that we focused on at our firm, is in the middle market. We're trying to find that sweet spot between scale and having impact at scale and innovating. In terms of your question about 2024 and beyond, capital is more scarce, and capital is going to try to seek the greatest return with, nothing. I'm not saying anything that folks don't know, with the most risk-adjusted return, and scale is going to continue to matter even more. And I can imagine folks at the conference that were raising capital at pretty aggressive valuations are probably struggling to raise as much capital now, and thinking about ways to continue to grow. And so finding that sweet spot, as Richard said, around being that innovative company that doesn't fall prey to the winner's curse or dilemma, I guess it's called, in this space can be easy because universities, districts can be somewhat risk averse in their buying, and so you can get comfortable that you have a sticky business when the reality is you can be innovated out pretty quickly. So it's finding that sweet spot. So I'm not sure if I fully answered your question, but that's kind of just off the cuff.
Well, let's jump in.
I'll just add on to that. I'll say that when it comes to innovation, one of the hardest things that we see about scaling is distribution channel. So, I work at Veritas Capital. We own 4 platforms in the space. We see a lot of smaller companies come in that could be add-ons for one of our platforms. And I can't tell you how many companies I see who've grown tremendously, but they can't get past 10 million of revenue. Like, they're stuck at that level. And I think especially if I pick on K-12, for instance, it's really easy to develop, a mousetrap, a product that works great. Maybe you're a formal educator, teachers love your products, and you scale within a certain geography, like you kill it in Texas. But then it is really hard to now bring that to the rest of the, 13,000 school districts in the US. And that's when it really makes sense to turn to a scaled aggregator who can maybe take that product to a more, national level. I think that another thing that we are looking at as we look forward to investing in EdTech, and this goes on some of the themes that Veronica was saying at the beginning, is trying to figure out what the post-pandemic normal is, right? That's one of the hardest things about being an investor in EdTech now is if we look at the 2020 to 2022 timeframe, a lot of EdTech companies were growing like gangbusters. Like everyone was doing really, really well. And now, as we're looking at the expiration of ESSER and more of a return to run rate, the question is, are your products still efficacious? Do schools still want them? Do you want them in a lower budget environment? And trying to figure out if that value proposition still holds in the new environment is something that's tricky for investors now.
Can I ask a question to build on that, and anyone's welcome to ask, maybe offer Dallas first of all. It is tricky, and things have changed, as you mentioned. Does that change how you look at potential partners when you consider investment? Are there different questions you're asking now that maybe you weren't asking over that period that are far more important now as you kind of diligence or assess which partner you want to work with?
Yeah, absolutely. I think that the number one thing to look at because we're hearing about school budgets, right? Schools are evaluating their budgets. They're looking at all the things that they gorged on over the past few years and trying to figure out what they want to cut and what they want to keep in their go-forward operating budgets. The questions that they're asking themselves are, what works? What actually is delivering ROI? And what are my students and teachers actually using? Like, what's getting actual usage? So I think that, if we're looking at a company that was kind of plodding along for a few years and then had an amazing 2020 and 2021, we're going to be skeptical about that. So we want to see usage statistics. We want to see, what is the funding source? Have districts been buying you out of operating budgets? Have they been buying you out of Title I, IDEA? Has it been ESSER funds? Those are all factors that are going to determining how sticky your solution really is.
Yeah, I would just add one of the things that we've been really focused on is your go-to-market and your sales and marketing capabilities actually distinctive and scalable, or was it more of a function of the liquidity and the funding in the market? And so we spent a lot of time trying to understand if you've grown wildly over the past few years, what have you invested in? Has your administrative functions within your organization scaled with the growth, or are you still a really small company that did very well over a period of time and may really struggle to navigate choppier waters? So a lot more diligence on the blocking and tackling than just the addressable market and the go-to-market.
Okay, I'll add one thing, which, flavor of the decade, which is, for every investment that we are looking at, whether it's in education or other spaces, at least at KKR, and we tend to do is somewhat larger scale deals that we look to hold for 5, 7, 10, or even 15 years. since we have this Promethean moment of AI, we need to have a red team that basically looks at a business and imagines what could happen in the next years with AI, and how does that actually, even potentially in a wild universe, affect the nature of whatever business it is we're looking at. Because when we think about how education transforms with AI, it gets super fundamental. It is the interrogatives you need to go to, like, when are people going to be educated? Where are they going to be educated? How are they going to be educated? With what and with whom are they going? I mean, all those fundamentals start to come in as a real crucible for the longer term view on these businesses, and you sort of need to stress test them against what could be with AI.
Yeah.
I would just build off that as well. I think we could talk about AI for many hours here on this panel, but one other thing to take a step back and think about is what does the overall world look like with AI in 5 to 10 years' time, and what does the job market look like with AI as being one of the key enablers, but also disruptors in so many sectors. And so we know it will impact, law, finance, healthcare, technology in general. And so I think education being one of the fundamental sectors that must train and enable for us to have the skills for this this new world we're in, must really deeply take those potential disruptions into account in overall the education system.
If I could just add, I don't want to be the one up here to say that I'm not worried about AI, but I have to say one of the things that has always surprised me about our space is that we're way behind from a technology perspective. So the question is, how quickly does the end market actually adopt what maybe investors or more cutting edge or bleeding edge entrepreneurs bring to market? So it is, I completely agree. I just have been really surprised at how slow technological adoption has been. And at the end of the day, when you're teaching preschool age kids or elementary kids, it's still going to require human beings. So I'm not at all saying that I'm not focused on it. It's just interesting to try to navigate when you have a sector that's been so slow to adopt technology.
I fully agree with that. One of our companies is teaching strategies in the pre-K space, and the socialization part of this is invaluable to children, and we need to keep it front and center, particularly for those younger ages. But we are entering a world where, interestingly, for the first time, the consumer may have access to tools that can educate their children far better than an institution can. That's a pretty radical switch for a variety of ages, maybe not the youngest ages, but a variety of ages here. And then I'll try to get controversial with this crowd for a minute. There's a possibility that duality we were talking about of innovation and scaling, AI could disintegrate that, because if you think about a few years from now, AI itself may create the innovations, and AI may be able to scale those pretty quickly if it's fully distributed. So we may be in a very different atmosphere at that point, but we don't need to get science fiction on all you guys.
Well, let's keep going. Let's get science fiction. We'll change the order a little bit, but now we've talked about AI. There's a risk, and we've mentioned that, and we'll come back to that in a minute, and the role the investor plays. But what sort of AI innovations have you seen that kind of particularly excite you? Like, what have you seen that's like, this is particularly cool, this is going to be groundbreaking? And maybe, Veronica, I'll start with you. Like, is there something you want to share that you've seen that this is a great idea? And I do want to open it up to the panel as well.
Yeah, we think about this a lot because we also, next to our private equity fund, have a venture fund very much focused on AI. And so these are questions we have every day. Maybe I'll kind of answer your question a little bit differently, though. I think one of the biggest questions that we are grappling with is whether or not in the education sector, AI will be an accelerant for scaled players to do more, or will it be something that actually enables startups to grow much faster with much less? So you could see arguments both ways. You know, imagine the startup that education content and products used to be so expensive and take years to develop. You can do that now in days or weeks. I have seen people spin up new educational platforms in several weeks' time with a 5-person team, not 100, you know. And I think that is incredibly powerful. We talk across the technology sector about the 10x engineer that we now have with AI, the fact that you can do so much more with one coder. But I think in probably 2 to 3 years' time, we'll be talking about a 100x engineer. In fact, we may be talking about the ability to create new technology platforms and products with zero coding abilities whatsoever, right? Prompt engineering your way to a new product. And I think that is a very real future in the very near future. So startups have a wonderful advantage and a time today to build new products. Scaled players, on the other hand, you know, we talk about data as the new oil, right? And I think that scaled players have this other tremendous advantage, which is the decades, oftentimes, of incredible student data, of teacher data, of learning data, and being able to develop much better, much more personalized products, much more individualized learning experiences through the kind of incorporation and training of the models on that data that they have, which for the most part is proprietary to many of these scaled players, I think is also an incredibly inherent, powerful advantage. So that's a question we ask ourselves on both sides, is for some of our larger companies, you know, our Spring Education, our private school platform, or for the Princeton Review, you know, for test prep, what can we do to leverage the data to build new, better, high quality products for our students and for our teachers? And on the venture side, what are areas in which a startup can do much more with less to innovate and move faster than an incumbent?
I see Alice jumping in. Do you want to add to the accelerant for startups and differentiator for scale players? Do you want to?
Well, I guess across where I've seen AI play in my portfolio companies is definitely on the operational front. So I agree with Veronica. We're seeing it. You know, we're making R&D more efficient. You know, we're getting rid of maybe some, you know, customer success operators because you can do it with AI now. I think it is impacting the product on the margins, is what I would say. So for example, you know, we own a company called HMH, which is a K-12 instructional provider. We own a product called Writable, and with AI, we're able to use that to help teachers grade writing way faster. Or, you know, we own another company called Finalsite. Finalsite uses AI to help teachers and administrators generate messages way more quickly. Makes everyone's life a lot more easier. I would say, though, that I think there's still a little bit of skepticism towards AI on the part of the consumer, the teacher. I agree with Adnan's earlier point. If you look at a lot of the surveys, the teachers aren't completely gung-ho about incorporating AI into their classrooms. I think there's still a lot of skepticism towards it, which I guess makes sense if they don't know if their students are authoring their own essays, et cetera. But I think that, Richard made a point early on that there's a lot of behavioral inertia in education. If we think about even just the role of technology in education, it took us a long time to get to one device per student. It took a wholesale event like COVID to actually make that happen. So I do think that while AI is obviously, it's something that everyone is super excited about, you can't do a presentation these days without someone talking about AI. It's not necessarily something that at this point, as an investor, I am underwriting into my base case about this company's growth, because I still, frankly, am skeptical about how it's going to roll out.
Yeah, I'll just add, I mean, a couple of companies I'm involved with, Chegg, which I co-chair. I hope you're right about the value of data and the ability to train, and I think so far so good. But these, the base models are developing very quickly, and who's going to derive the most value from the changes in this marketplace? It could be mostly these large players who can, feed models an incredible amount of data. I think there is one thing that we ought to acknowledge, though, and that is the value of human connection is going to be more important, is going to be valued more as we get to more and more technology, the high-tech, high-touch thing will be, I think, even more pronounced. And so whether it's a teacher's interaction with a student or a student's interaction with a writer or a musician or whatever, that they feel that there's kind of that one-on-one connection with someone's expression and it's human, it'll be valued more. I mean, that's one of the reasons we bought Simon & Schuster, for example, because we believe that even in a world of AI where you can talk to your AI companion ad nauseum and it'll be omniscient, et cetera, there's still going to be need for human-to-human connection, whether that is unmediated, person-to-person and physical, which I think is the best, or even mediated through a thin medium like a book or a downloaded music cut or whatever. We think those, people will still be responding to that and valuing that. Maybe more so because so much of our lives will be sort of all this AI stuff sort of vomited forth at us. So I think there's, a balance to be struck here. And if you have those businesses that have data advantages, et cetera, you definitely want to leg into AI to take advantage of what it offers. If you have an entrepreneurial enterprise that can go much faster with much fewer people, AI is for you as well. But for the rest of humanity, I think there's an kind of antidote to AI that's also going to be out there and further valued.
Thank you. And I'm going to maybe pause in the AI conversation so I don't get in trouble for making this like a pseudonym, actual Gen AI conversation. But Adnan, I'd love to ask you, so we've talked about what you're seeing in the market, what you're looking in the market. Maybe to flip the kind of conversation a bit, like how, if any, do you think the role of the investor is changing? We've talked about the risk of Gen AI, which I said I wouldn't mention again. We've talked about kind of funding changes. We talked about kind of difference in kind of purchasing dynamics. Like, is the role of the investor different now? Do you have to play a more active role?
Yeah, I don't know if it's changing, but what I can say, it's part of our thesis from the beginning of our firm has really been around partnering with management teams, whether they're entrepreneurs in a growth stage or large companies, maybe in a take-private situation, and finding management teams, that we can partner with to have a shared vision and create value. And that seems to have resonated in the marketplace when capital is somewhat commoditized. Now, obviously, this market is somewhat different. So I don't know if it's changed, but it's clear to me that in particular management teams, but even other financial sponsors are valuing bringing diverse perspectives around the boardroom, bringing real expertise to support growth in the companies that folks are invested in. And I can say in an environment where there's less liquidity, investors aren't seeing a return of capital, GPs are looking to sell businesses, but they want to continue to stay invested in companies, and those partnerships with other financial sponsors that bring value has been a huge catalyst for our business. And so we are seeing that expertise, sector expertise in a partnership mindset does differentiate capital, but it does require an entrepreneur or a management team to want that and have the confidence and the security that bringing diverse perspectives around the table is going to create value versus create challenges or disruption.
Would you like?
Yeah, I think that one thing that has changed, to a point that Veronica made earlier, is the fact that obviously interest rates have gone up a lot, which is something that the people on the stage probably think about way more than the people in the audience. But it does change how you approach an investment, and it's any investment, not just education. I think that you do have to focus a lot more on just like operational execution now, and driving as much of the value thesis as you can under your ownership. I think that because the days of just easy, cheap capital are gone, you're looking for a partner that can really help you execute your strategy and really help you perform best in class. whether that's because they've got, a previous playbook, they've done it with one of your peers, they can do it. They're willing to help you invest in sales and marketing. They're willing to give you the dollars for R&D. They're willing to put money behind you to go and buy this one company that you've had your eye on for the past 5 years. I think that being able to actually enact real transformation under your time as a steward of capital becomes more important because you can do less of the financial engineering, if you will.
Yeah, I'd agree with all that. I'd also add, our main role is to provide capital for things that make sense from what we call an alpha standpoint, and that is the generation of value over time, and especially in the venture field from a beta standpoint, where if it does generate value, it'll be a lot of value relative to the original investment. What I think is important to note, that's our core function as a capital provider. You guys probably looking at us as 4 bags of money up here. That's why you're here in the audience. The thing that has changed, though, is, and I think our founders were early on this, is investment has been much more about like and trust than it ever has before. Having come through all these different market cycles, having come through COVID and the cycles associated with that, when a business can be financed, you generally have a choice around who gets to finance you, and you get to choose the people that not only can help you execute your business plan and help you scale and have specific industry expertise and connectivity, et cetera, but also people who you end up having a kind of relationship of like and trust with. And I think, we're all institutional players, but we become players that are very personal as well. I actually see one of my investees in the back of the room, Overdrive with Steve Podash, and those relationships, like mine with Steve, end up being, a lot of the reason that there's not only the comfort with the original investment, but the comfort on how you articulate the strategy, plans, tactics, and day-to-day, month-to-month, quarter-to-quarter development of a business. And so pay a lot of attention to those early signs when you're talking to your potential investors or your potential investee companies, because those early things that sort of annoy you become really big things when you have them as an investor. And the early signs that you could really work with this person and things would be good become really important as you go in and encounter the kinds of vicissitudes and problems and opportunities that you do.
Does that mean that Gen AI is not going to take your job?
Yeah, that's the main point. Yeah.
Thank you. I want to squeeze in 2 more questions. Maybe bring it back to you, Alice, for a second, based on your experience in this. But I want to talk about kind of the dynamic between consolidation in the market around platform players and the future for kind of best-of-breed solutions. And I wonder what the consolidation in the market around kind of platform players and bolt-on acquisitions and building a scale player that can bring everything in end-to-end services or solutions versus the kind of coexistence of best-in-breed players. Where do you see the market going?
Yeah, absolutely. So I think that there are 2 worlds. So we have platforms in K-12 and we have platforms in higher ed, and I think that the answers to both are a bit different. In K-12, I think consolidation absolutely helps, and that goes back to the fact that I said you really need a large distribution channel. There are 13,500 school districts. It's really hard to knock on the door of every single one of them. So being part of a scaled platform in that regard is helpful. I also think that decision-making in K-12 districts is a little bit more consolidated. So when you think about cross-selling your products, which is, us in private equity, we love cross-sell, it's way easier to do in K-12. If I look at higher ed, there I am more skeptical on the value of the scaled platform. And that's because what I've seen in higher ed is that decision-making is just way more fragmented, right? So like faculty is making their decision completely apart from the finance office, completely apart from academic affairs. You've got multiple stakeholders, you've got multiple different budgets. I feel there you see more of a gravitation towards best in breed than than necessarily the scaled provider. Now, if you were to survey decision makers, they'll all tell you, oh, we would love to be able to bundle. Like, it would make our life so much easier to have one point of contact and, better economics. But I think in reality, everyone wants the best solution for their independent department, and it becomes much harder to cross-sell in that environment.
In K-12, do you see the future existence of best-in-breed solutions, or will it just be portfolio players?
I think that we see a lot of terrific solutions in K-12, but like I said, I think that they get to a point and then they kind of asymptote, and then they really need a partner to take them to the next level. That's just based on what I've seen.
And just to add on, I completely agree with Alice's point about K through 12 and the very, very obvious synergies there of a platform player. I would just highlight one thing, which we're kind of really paying attention to these days around things around consolidation and M&A, which is, again, going back to regulatory, the role of the FTC. I think that is something that has already played a very active role within consolidation in other spaces. And I think it is something that within education is something we need to really pay attention to now as well. There is an increasing amount of oversight and an increasing amount of focus on deterring M&A to create sort of, so-called platform players and all across many industries. So I think education will be another area where this will play a role.
Thank you. And so we've got just under 5 minutes left. Just a reminder, there won't be any time, or there isn't any time in the conference at all for Q&A, but the panelists will be outside, and if you manage to find them politely, they may have time for a question or two. I'd like to give each panelist maybe 30, 40 seconds, which isn't much time, but just to kind of share one kind of closing thought on looking forward, what specific investment areas are you excited about? And if I could just kind of go down the line and anyone can start, but like what one or two segments, areas, sectors, dynamics, trends are you particularly excited about that you're focusing on as a fund? Who would like to go first?
I'm happy to take it. It's a pretty tough question to answer because everything we look at tends to be somewhat larger scale, and it's in the context of what that company is, what its future is, and honestly what its price and price expectation is. But what I'd say we're looking for are a couple of things. If there's a company that needs to have change in its markets to succeed, we have to think about what is sort of a truism in education, which is that people who have the incentive to make change have no power to make change. And people who have the power to make change have no incentive to make change. This is particularly true, as you said, in higher ed because of some of the faculty dynamics in higher ed, but it's also true kind of shot through the entire education landscape. So what we tend to look for are models that have proven themselves to be resilient across all of these changes that we've been talking about, and endemically profitable so that we have some projectability of where they can go, where we at KKR think we can have an angle either to perhaps internationalize a business or to expand its reach from one sector to another, or to expand its penetration into the sector that it is in. We need to have that thesis because, as I said, we're up here to create alpha. That's how we generate returns for our investors. Those returns need to be ahead of a decent inflationary economy today, and so they need to be substantial. And so we're looking, this is pretty generic, but we're looking for those types of businesses. We do not really care whether a business is pre-K, K-12, higher ed, K to gray, corporate training. We look at all these different sectors, and there aren't that many companies at the scale that make sense for KKR, but we are, this is more than 40 seconds.
Slightly.
But sorry about that. So I'll just close with that.
Yeah, so maybe not as thoughtful, but where I spend a lot of time thinking about where AI is going to go is if we think of educators, job seekers, employers, that market has not cleared, and private capital has played a meaningful role. And I think a lot of the platforms that we've invested in, in some way, shape, or form, touch that challenge or help bridge it. Where AI is going to take learning in terms of what students expect, and then really what jobs are going to look like 3, 5, 10 years from now. You touched on it in terms of what does an accountant do. I think we're still going to have a shortage of accountants, but the role of an accountant is going to be different because there's going to be different tools. So where we're really trying to spend time right now, as much as anyone can have a crystal ball, but what are students or parents going to expect in the training, and what is the training going to look like? And that trend, I think, is going to create a lot of opportunity for innovation and scale, and frankly, hopefully create a more sustainable economy where everybody feels like the American dream or economic mobility exists, because right now the education system isn't necessarily serving everybody, and so I do hope that some of these innovations will change that for us.
Alice?
I echo some of what Richard said, which is, at Veritas, we don't really do broad thematic investing. We just try to invest in the right platform at the right time. That being said, I can just kind of give you a quick punch list of our opinions on a lot of the sectors right now, which is, K-12, continue to think that it's going to grow, albeit it's at a much, slower clip than we saw in the past couple years. Higher ed, candidly, more bearish on, just giving declining enrollments, and I think that there's more suspicion and views of lower ROI towards higher ed in this country at the moment. Early education is something that we're starting to look at. A lot of tailwinds around the rise of dual income households, and more philosophy around the need for education at earlier age levels. And the last one, corporate training, is it's something that we've looked at. I think that the hardest thing for us to get comfortable with around corporate training is that it can be very pro-cyclical, especially depending on what area of corporate training you're in. If you're in something that's related to regulation compliance, great. More learning or development, leadership based, less attractive.
Do you want to?
I realize we're out of time and I have enough.
They've agreed to extend it to let you finish.
Okay, fantastic. I was like, I have negative 10 seconds to agree with everything that has been said. No, I think I couldn't have said it better myself. I think my fellow panelists have hit on really all the key points. Again, I would just add one thing, and I hate to sound like a broken record, but I am fundamentally a techno-optimist, and so I do very much believe that AI will be transformative, and we are very actively looking at ways to leverage this new platform capability for both our existing portfolio companies as well as using that as a lens to view new opportunities. And maybe it's because our North America office is based in Silicon Valley, but we think about it in terms of internet as a platform, infrastructure revolution, mobile as a platform, structural revolution, and now AI. And the rise of all of those different structural and infrastructure innovations has enabled for just such a diversity of new and previously unimaginable business models and products and services. So I'm really excited. I don't think that we know at this point in time today what the future holds, and I don't know if we can use today as the way to kind of judge what the impact of AI will be on the education sector, but we'll just have to wait and see.
Thank you. And thank you all for coming. Thank you to the panelists. And one brief reminder, we need to leave the room pretty properly for the next panel, but if you want to thank our panelists, and have a lovely day.